Ever since 2019, corporate Malaysia has seen at least one major healthcare deal take place each year, save for 2022, at valuations that some would call lofty. All of those deals were largely translated at EV/EBITDA multiples that were higher than those ascribed by the market to those assets. Were those price tags justified?
Sunway was the first acquisition of a major private healthcare group that we know how much was paid for, because previously there was another acquisition. If you remember, the acquisition of Columbia Asia by Hong Leong Group, but they never actually provided what was the valuation for. So when GIC bought 16% stake in Sunway Healthcare Group, that valuation becomes sort of like a benchmark for private healthcare valuations. Then, of course, after Sunway, there was the acquisition of Ramsay Sime Darby Healthcare by Columbia Asia. So that was also quite a pricey deal. And even IHH Healthcare, IHH did bought two private hospitals. The first one was Prince Court Medical Center, and the second one was Island Hospital in Penang. And the acquisition for Prince Court was at a 21.9 times EV/EBITDA. IHH paid 24.6 multiple of EV/EBITDA for Island Hospital in Penang.
He goes on to explain that in the case for Island Hospital, it is known for handling more complex medical cases, which is said to justify the high valuation. As for Sunway Healthcare, one of the conditions for GIC's buy-in was an obligation for Sunway to list the healthcare business by 2028. The million-dollar question is, will this mean higher healthcare bills?
So we cannot be very sure that, because the investors have paid so much, that hospital bills are going to go up. But investors would definitely want a good return for their investment. So the more pricey the deal, then you would have to find ways. It will become a pressure to the management to find ways to increase their return, increase their profits, to pay back the shareholders.